Ladies and gentlemen, on behalf of Captify Consulting Investor Relations team, I welcome you all to the Q4 and FY26 post-earnings conference call of GE Limited. Today on the call from the management team, we have with us Mr. Umesh Agarwal, Joint Managing Director, and Ms. Payal Agarwal, Chief Financial Officer. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements, which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to briefly run us through the investor presentation with the business and performance highlights for the period ended March 2026, the growth perspective and vision for the coming year, post which we will open the floor for Q&A. Over to the management team.
Good afternoon, everybody, and a warm welcome.
Good afternoon.
So we'll begin with, of course, we'll give a quick brief recap of what GE Limited is, what the journey since the last 1960s when GE Limited was incorporated. And then we'll quickly, of course, come to the Q4 and the FY26 numbers and the growth vision and what the company looks forward to in the upcoming year. This year. So, of course, the company was incorporated in 1960. This is a small snapshot of a timeline of how the company has grown over the years. In 1996 to 99, our current promoter management, we took over the company from the erstwhile promoters and grew it forward from there. Actually, the journey really begins from there. In 2006, 2008 was our, first and second rounds of expansion, where we also set up and expanded our manufacturing facilities from Maharashtra to the eastern part of India in Kolkata. Again, in 2010-11, we expanded our product basket from not only stick electrodes to the other wire rods, and other categories of welding consumables. Again, in 2013-14, there was a breakthrough in the Inconel series, and the saw wire facility was installed in Calcutta. 2025-26, of course, probably few of y'all who are here today are already investors with us in some time, and few who are new, I would just like to brief. So the last year, of course, there was a change in there was a slight restructuring. I won't call it change, but the restructuring in the promoter management, where few of the promoters took an exit and stepped out of the company, and now the company is actually realigned and now going ahead with better growth and focus and aggressive vision strategy for the upcoming year. The key management team, of course, has Mr. Om Prakash Agarwal and Mr. Umesh Agarwal as the joint managing directors. They both are having more than 25-30 years of experience in the welding industry. Myself, of course, Payal Agarwal, I'm a chartered accountant and a CFA, and I'm the CFO of the company, handling the finance and the compliance requirements in the regulatory environment. These are snapshots of our manufacturing facilities. This is the snapshot of the facility in Kalyan. This is the Kolkata plant. Of course, this is the state-of-the-art plant in the welding consumable industry. And this is one of the largest plant in the welding industry. Of course, research and development remains the core key focus and a competitive strength. It is the moat that the company has, a competitive edge over its other competitors, and a lot of the regional players also, I will say.
There are few products which we had developed, and right now we are having a...
If you could just, yes, please.
So there are some of the products which we have developed for various sectors. One of the key sectors is defense, for which we have developed our product called Cadet 100 and G-Flux 521. It is used for building up aircraft carriers such as like Vikranta and everything. And due to current situation, Indian defense is investing huge. And since we are one of the key developers in the same, so we are getting very good orders. And in near future, we are believing that it will give a good exposure to the company. Similarly, now they are also speaking us to develop the consumers for the submarine. Recently, you might have heard that MDL Majgaon Dock Limited have got a 7,000 crore project for submarines, and they are discussing us for developing consumers. Now, other than that, defense, there are projects which are going on in power, especially nuclear. Recently, we got approval in nuclear. Now, there are only 1 or 2 companies in India who is approved for nuclear power sector. We are one of them. And by 2030, the nuclear department has announced that they will be installing more than 25 or to 30 gigawatt power. So there's a huge investments and which gives us a huge opportunity to supply our products. And we are all geared up, and our company is also approved by NPCIL. So it's because of all research and development. We have got 3 to 4 key peoples in R&D center who are working with us from last 15-20 years. And one of them or two of them are known as a father of welding in the country. So it adds a lot of value into our R&D.
I think we can go to the product. If the different product categories that G has in its umbrella, and it's applying all these products across the
So
categories.
basically, right now at present, we have got around 7 categories. SMAW electrode, which is basically for fabrication purpose. It comes into various categories. For example, carbon steel, stainless steel, in nickel alloys, hard facing consumers. And recently, as Payal was telling you about, okay, we have developed 2 3 few years back in Kunal. Now we are reaping the fruits. At present, we have got a huge order of Inconel orders from various companies like BHEL and L&T. Second is the low input electrode. Low input electrode is something which is called which is used for maintenance purpose, like cement sector, steel factory, cement, and everything. So slowly we are putting our footprint into all the sectors. Recently, we have also got the RC done with the Sri Cement, which is a major breakthrough, and as well as with the other steel companies, we are in process to talk, and we are also developing. We will be one of the first Indian company to develop cladding fluxes. We have already submitted our samples to BHL Trichy. They are the testing process, and we are very confident it will be approved. It will be developed. Submerged wire and fluxes is a third category, which you will see has got a huge application. It has increased, especially in the PV sector. PV sector is a pre-engineered fabrication for industries, as well as the for the fast automation building. Recently, we have also started our production line. It's one of the biggest production line in the country with a capacity of 30 to 35 metric tons per day. Flux core wires, uh, as we discussed last, we have already we are installing our capacity for flux core wire. Till now, India was importing flux core wires, but because of the recent changes in the government policies, Bureau of Indian Standards, now they have made it mandatory to manufacture in India only. So soon in July, we will commence our own production. Machine has been selected, and this month we are also getting machine dispatched. It is one of the major producer of flux core wire line worldwide. So we have taken the machines and the know-how from them. So July, I think we'll be producing the same. It has got a very high potential and big market. Brazing wire and fluxes is a small market, but we are there. For example, like silver brazing, copper brazing. These are very niche products used in for very small quantities. Like recently, we have got a order from L&T and BHEL for brazing silver brazing wire of 45% to 54%. That sell 1 kg, you can consider around 1.5 to 2 lakh rupees per kg. So though the quantity is very small, but then it gives a lot of potential and value addition to our company name as well. MIG wire is something called ER70S6, which is highly useful in the auto sector. If you recently see in Pune, government has now declared zone B, C, and D and giving a major subsidies up to 70% to the industry, which includes subsidy not only for land but for construction as well as the capital equipments. So many industries are coming up. Near Pune, I think is coming up a major auto hub. Pune itself will become a market of more than 5,000 tons of MIG wires per month. So we are also planning to expand our capacity and take good share in that. We have a good name in MIG wires under the brand name GM70. Now the last product is the TIG wires. TIG wires is basically used to for where you require very precision welding, and stainless steel has got a huge scope, and especially also in European market. This year we are also planning to take approvals of TUV, and which will give us opening in Europe market, and especially after India and European market treaty that there'll be 0% duty. So we believe that we will have a good chance, and it will be opening an exposure for around more than 250 tons per month to export in European and other countries, for which we have already started our work. We started participating in exhibitions and meeting few clients, and we are getting a good feedback for our products. Over to you, Pal.
So, of course, the last year was the major turning around here for the company, as I mentioned, because in May 2025, there was a restructuring in the promoter management. I look at the business highlights. They were key, as Mr. Rumesh also pointed out, that there were quite a few very, very focus driven and, absolutely, strategic inroads into few key sectors of the economy, such as cement, nuclear power, and of course, engineering and infrastructure, where we were already present, but breakthroughs in few key players also. So, specialized product development, which we've already spoken about, is the P91, P92 grade series for thermal power applications. And of course, the company has successfully completed the testing for 30,000 hours, also continuous testing. The new
30,000 hours means 3.5 years.
Yeah, so the company
It's a
has
non-stop
been able
testing.
to complete that, and it is a non-stop. Even for 1 second, there cannot be a breakage, like there cannot be a power outage or anything in that testing to be approved by these companies. The new product approvals, as we've spoken, we've of course secured product approvals for new industrial wires, strengthening the high performance portfolio of the company as well. Value addition like TIG wire and the precision welding wires. The strategic sector presence, of course, means that the company has been there. Omnibus, it has been present in majority of the industries, the oil and gas, the thermal power, the infrastructure, steel industry, and it is making inroads into further sectors where we felt that our market presence was not as evolved.
Just to add in between, as Pal was saying about the railway sector also, so one of the prestigious project which we completed is the Chenab Bridge, which you all must have heard about, is one of the tallest bridge. And from India, we were the only player who was approved for the maximum thickness of the welding. Along with us, there were another two international presence. So it's a proud moment for us as well. And
I think proud also because, as we mentioned about the defense sector, again, the defense sector is something which, in this very, very dynamic and unpredictable geopolitical scenario, the defense sector is assuming much more significance and importance than it ever did in the past. And Indian government is very, very strongly and heavily relying on made in India products only to cut down, of course, not only now in the current scenario when it's talking about cutting down on the forex outflow, but even otherwise, with respect to last year and the year before, the turn of events that is shaping up in the in the external affairs. So that also, so G Limited has been one of the very, very, it's a proud moment for us because we are one of the only few, like I would say, in fact, only welding companies which is supplying the INS Vikranta carrier and the other, aircraft, where G Limited has been instrumental in researching and developing welding consumables for those warships and aircrafts.
I think what Pal actually meant to say that any company in India for import substitute, they invite us, one of the most on first basis, and we have been able to develop such products and give the solutions to our Indian customers.
Course, we can look at the numbers, and Mohsin, if it makes sense, we can just go up to the numbers page. So if that gives better clarity, of course, the key financial highlights for the Q4 FY26, and the company went up, turnover went up to 112 crores for Q4 26, taking up the turnover, turnover for FY26 to around 370 crores from 334 crores last year,
I
FY25.
would also interview here, like since there's been restructuring happened from quarter one to quarter four, if we see only that growth, it's more than 58%, I believe.
So yes, so from 79 crores in Q1 to 112 crores in Q4. The EBITDA margins, we are standing at around 33 crores of EBITDA, which is a 9% EBITDA margin. Again, I think when initially when we were doing these invest calls and we mentioned that the goal of this current management and the realigned focus means that we will stabilize the operations of the company this year, go forward next year with a much more aggressive on a much more aggressive note. So yes, we're standing at a 9% EBITDA margin, and the PAT stands at around 13 crores, which is a 3.5% PAT margin. FY26, yes, the growth forward. So the target revenue is to grow and take this company in the short term to 1,000 crore company. Looking at a 25 to 30% target revenue growth CAGR till FY29. FY29, 2030 is when we are looking at hitting 1,000 crore mark. And there's ample headroom space in the economy itself, because the Indian economy actually really, there's a lot of growth potential, as we discussed also, be it the defense sector, be it the cement sector, be it the oil and gas, the power generation. Each of these core industries, which actually are the pillars of the Indian economy, are in their growth phase, are in their expansion, and actually very, very astronomical expansion figure growths. So there, that is where G Limited finds its confidence that we'll be, partnering neck to neck, shoulder to shoulder with on all these projects.
I think Mr. Ankit Gupta wants to ask something.
Yes.
We'll take the Q&A later. We'll
Yeah, we'll
complete
take
this.
the
Okay.
Okay. So the target margins, of course, this year we've stabilized the EBITDA margins with respect to FY25. We've again gone back to our historical, and in fact, I would say achieved more than our historical last couple of years historical EBITDA margins. We're also targeting to take this up even higher to double-digit EBITDA margins, going up from 10 to 11 to 12, and then 13% plus EBITDA margins, stabilized and sustainable EBITDA margins. And this would be possible, yes. And this would be possible because there is a lot of, as Mr. Umesh also pointed out, there's a lot of, R&D focus that the company does. There is a lot of, research and development talent that we have. And actually the fathers of Indian welding are there with the company. So that really, takes this whole journey and, looking at improved formulations, looking at corporations, materials cost, and of course, a more stringent cost control approach.
And above that, we are also planning power factor also plays a very important role. So soon, this year or next year, we are also planning to install solar power into our factories, which will also give us a good, it will help us to improve our EBITDA margins, and as well as our finance cost. I think it will considerably will go down in the current year
Yes.
compared to last year. So this actually, both the things are very evident, and it will help us to get the EBITDA into double digits soon.
I think, yes, this is an announcement that we made in Q3 FY26 about the company being successfully signing a development agreement with the builder for the non-core monetization, the unlocking of the value of its parcel of land, which is right there in the heart of Thane, which has been declared as a smart city. So the Wagli Industrial Estate is where the company already has more than 13,000 approximate square meter of land parcel, which it's planning to develop into commercial space and unlock its value and generate cash flows of more than 400 CR approximately into the company over the next 5 years. The capacity utilization, the current capacity, of course, includes both wires, continuous wire rods, and stick electrodes of all category, both stainless steel, mild steel. And this, of course, the utilization did come down last year to 48%, which has gone up to around 57%, which we are looking, as I mentioned, the growth to taking it up to 1,000 crores would not require much of a capex, because there is quite a lot of potential in the unutilized capacity, which we are looking at utilizing.
We actually have to add certain ancillary machines to utilize them to maximum capacity, for which we are already in work, and few machines have been ordered also. I think this year from 57% we will go to much bigger figure. Thank you.
Thank you. We'll take questions now. Sachin, you can go ahead.
Yeah,
Yes,
thanks
all
for
those words. Yeah. Yes, Ankit.
yeah, thanks for the opportunity. And these are very decent, very good numbers you have reported in this quarterly. So in this Q4. So if you we're talking about 25 to 30% growth in top line till FY29.
Hello.
If you can if you can talk
फिर
about
हम अभी क्यों निकाले फिर schools?
yeah, so if you can talk about what like which sectors will be contributing here, which like you have talked about getting into defense P91, P92. These are very specific alloys and high temperature resistant alloys. So if you can talk about that and like which sectors will be majorly contributing, like can you give us the broad breakup of which the current sector-wise breakup of our top line, and how do you see that changing for the next 2, 3 years, and which sectors will drive the growth for us, for this 25-30% top line growth that we are targeting?
See, I
That
would
was the
say
first
there are
question.
actually three, four sectors which will drive us a lot. For example, first is the power sector. In power sector, if you see right now in India, not only nuclear, but thermal and hydropower and solar. Solar does not have much of consumption of welding consumers, unfortunately. But thermal power also, government is planning a huge investments. Hydropower plant we already approved for some of the special wires and fluxes, for example, EM4. We have got approval already from northeastern players. We started supplying, and I think the current year there's going to be huge consumption. So, and also government is planning to operate another 150 very small hydro projects in different parts of the country, so that there is no surge takes place in the state. So this is one of the projects. Second is the thermal power plant, where government is again planning to for the expansion of another 25 gigawatt, 20 to 25 gigawatt, which is very exponential. BHL, 3G, and L&T Power, they are actually booked for the next 10 years. They do not have a further capacity. They are also expanding the capacity, and we are one of their major vendors. And we have already started supplying them a lot many consumables. Third is the Nuclear Power Corporation. As I said, 2 weeks before only we got NPCL approval. Now they are also considering us for many other special grids for which already discussions are going on. The 2 days back they have also visited our plant. Adani Power is also one of the key player. 3 months before they have already approved more than 50 to 60% of our products, and the few products which are pending. So I think this month or early next month that also they are under testing and discussions are going on. It should be through. So power sector will give us a major breakthrough. Secondly, railways. Railways, for example, not only in normal railway but bullet train as well as uh, metro. There's a huge requirement, and I believe what we heard that this year, once all the elections are over, there's gonna a huge order of more than 20,000 bogies of a multiple of bogies order has is gonna release soon.
And all the wagon manufacturers in actually eastern part of India in West Bengal.
Absolutely.
And
For
we are
example, like
approved, and we actually were supplying and are supplying to all of them.
so basically, Eastern India is a major hub for railways. For
Yes.
example, like Jupiter, Texmaco in private players, and we are the approved vendors, and we are supplying in bulk quantity for them, and we are all equipped to meet their demands. Third, you can say export. Export also now, as we said, we are taking TUV approval for stainless steel wires and all that. So it's gonna also, I think, within 2 years, we will grow our export business more than 3 times. So these three sectors and power, railway, export, all these three centers are gonna drive. And fourth is the defense. There's a major investment. So I won't say that only one sector. Fortunately,
Yeah,
our companies is approved in across all the sectors, and combining all these sectors will drive us the growth. And
sure.
if suppose one or two sectors goes here and there, so we are not dependent only on one sector. So that's a benefit and plus point for us.
Okay. And if you can talk about what will be the sector-wise breakup of our top line for FY26, like broad breakup, like how
See,
much will be
it's very
automotive? Hmm.
it's very difficult even for automotive sector also. It's very difficult to give a breakup of that. For example, I tell you like L&T. L&T does work for power sector also, nuclear also, for bullet train as well, and
Hmm.
in refineries and power sector also. So they buy for all the sectors.
For the
Similarly, it goes
different
for
projects that they are executing, they're buying from us.
similarly BHEL, or there are many contractors. So they
Hmm.
buy for all the sectors. So it's very difficult to give them to give you that how much each sector will be buying from us. So that is
Sure.
very difficult to say. But overall, what we are assuming that combining every sector, it is gonna give, and we'll soon what we are projecting the numbers, we will be able to achieve it.
Sure, sure. So, let's say, for you have also given a target of, increasing our margins. For FY27, how should we look at the margins? Like we are at 9% currently for the full year and
We are
almost
looking
as,
at a double digit plus actually. We are looking
okay.
at a 10% plus margin, EBITDA margin, and we are looking at a 500 plus top line as well.
Sure, sure, sure. And like if I compare your products with the some of the leaders in the segments like ASAB and Ador, so in terms of product, like compared to their product basket, uh, there would be certain high margin products which they would be having, which mostly we will not be having. So on
See,
the product
ISAB
side, how are we compared to them in terms of a product basket?
See, ISAB has got two, I would say three things. One is welding consumables, where we are there.
Hmm.
Second, ISAB has now closed various factories worldwide, for example, for Africa and all that. And even now they started factory in Saudi. So ISAB India is supplying the consumables to them. So
Hmm.
ISAB's turnover is basically not to, but they are
Third
supplying,
party,
but
external
then they are supplying to
parties.
their own ISAB units worldwide. So
Sure,
that is
sure.
second. Third thing, what has happened recently, ISAB in last 5 years, you will see ISAB has taken over many companies, so which is adding value to it. Fourth sector, ISAB is into welding equipments and accessories where we are not at the moment, but we are planning to start soon in a year and two once we more stabilize our consumable business and achieve it, and for which we are already rather in talk with one or two companies whose turnover is not very high, but then they are into small to medium segment, and which we are planning to take it over so that we get into those segments, and it will also boost our sales. For example, into safety equipments, and maintenance consumables.
Sure. So
Yes,
in
sir.
terms of,
Ankit, may I
sure, I'll
request
come
you
back
to
in the queue.
present the... Yes. Thank you. Thank you. We'll take the next question from Rahul Jain. Please go ahead. Rahul. We'll move on to Madhur Rathi. Please go ahead.
So thank you for the opportunity. So I wanted to understand, you mentioned that we are the ones who are supplying to INS Vikrant and other
Can you hear
naval
me?
carriers.
Oh, sorry.
I just wanted to understand that what percentage of our revenue comes from volume comes from these specialized applications, and where do we see this moving over the next few years? And with so much shipbuilding happening in India, where should we see GE in this tailwind going forward?
See, shipbuilding right now, again, there are two parts. One is for the defense, another is for the shipbuilding, which we all have heard that in next 5 years, shipbuilding is going to be a major factor, for which flux core wire will be the major consumption, and which production will really commence from July and August onwards. And as far as defense is concerned, I think for that particular product, we are having more than 70 to 80% share, and it's very difficult to say the numbers at the moment because it is very project oriented and upon the tender business, but we are getting 70 to 80%. Last year I think we have got a share of more than 10 to 12 cr of that particular project, and this year which we are planning that it will go more than double.
Around
So,
25 crores is what?
Yeah, 25 crores was from the specialized applications.
That is only
From
for defense.
defense only.
Only for defense. Like
Okay.
Payal recently said in the beginning of the presentation that we have also developed inconel electrodes. Now, inconel electrodes is something which sells between 2,500 to 3,500 rupees per kg. At the moment, we have got a pending order of more than 20 tons. Thirdly, for cobalt alloys, which we have started last year for cobalt alloy itself, we have done the business of more than 10 CR. The items are very expensive but niche. The prices are somewhere between 3,500 to 5,500 on the basis of various grades. This year, we are also looking to double the business of cobalt alloys as well. So all those sectors, it will be great. And for power sector also, which we said we have developed special wire EM4 and fluxes. So contributing to all those sectors, I think the business gonna be significant.
Right. So out of this closer to 36,000 volumes that you did for this year, how much was from these specialized applications which are where realizations are much higher than the normal electrodes?
I think that figure we can
Yeah, we can get back
get back to you
to the exact numbers.
numbers.
Thank you. We'll take the next question from Rahul Jain. Please go ahead.
Yeah, thanks. Am I audible?
Yes, yes, Rahul.
Yes.
Yeah, sure. Thank you for the opportunity and decent presentation and congrats for the good numbers. So
Thank you.
just to understand, typically when we talk about the kind of growth which we are talking about, and some of our peers are not talking about that kind of growth. So what are we doing different that we will be able to grow 25-30%? And I understand this growth will be front-ended or will it be more back-ended?
I didn't get you. I mean by front or back-ended. Can you
So
please be
what I
clear
mean
on
to
it?
say is when you say we will grow 3x our revenues by FY29, and we have talked about growing 25-30% revenue growth. So will it be like linear key? You'll have say maybe 30% growth in FY27, maybe 25 in FY28, followed by 25, or this year will be lesser growth and the growth will be more in FY28 and FY29? How do we
No,
look at
All
it?
these 3 years, I think we have
I think we have spoken, so I'll just do you want to complete your question, Rahul?
And if you're talking about this kind of growth, so from the base where we are today now, we are going higher. So what gives us the confidence that we'll be able to achieve this kind of growth, given that some of our peers are not growing at that extent, or they are not looking at that kind of growth?
See, I think that question, of course, on a lighter note, I think you should ask our peers why they're not talking about this growth, because the Indian welding industry itself is I think, a 15 to 20,000 crore market. And right now, today, we are standing at anywhere close to only 400 crores. We are not even talking about very, very exponential numbers. We are only talking about capturing around 10 to 15% of the market. Currently the market, the Indian welding industry is split into the organized and the unorganized sector. Of course, 50 to 60% now after GST implementation is organized, but there's a very, very substantial unorganized market which still exists today. And the shift is very, very heavily, and of course, I think we all on this platform would agree, is moving towards the organized sector. So if that kind of exponential growth is there, if you talk about the steel consumption per capita of India, it is much lower at around 80 tons per person compared to even other countries like China. And I'm not even
kgs.
talking about, yes, and kg, sorry. And I'm not even talking about the developed countries like the Europe and the US. The steel consumption per capita is a very, very defined and a definitive marker of the economic development of any country. So, if that is the country, that is the growth that we are looking at, infrastructure is the only way which actually takes the economy forward. And the industry that we are operating in today, the welding industry, is an industry which participates, it is sector agnostic and it participates across the spectrum of infrastructure growth, be it pipeline, be it connectivity, be it logistics, be it power, be it shipbuilding, be it defense. You name each industry, the back end of it is supported and actually pushed by infrastructure growth, where welding consumables is plays a important and a strong role. So that is why I'm just saying that the company going up to 1,000 crores is only going to take up 10% or 12% of the capture that much of the market. I don't think that's a very ambitious call. And given the kind of approvals that G Limited has in its kitty, we are extremely confident of taking it forward and achieving those numbers actually in 3 years' time.
And most importantly, I would say your companies have got a presence in both the sectors, both approval business oriented like power, defense, as well as the retail segment also. If now see the retail segment presence has increased a lot in terms of even normal residential or commercial buildings are being made. The type of steels they are using is now no longer only a commercial steel. They are using little specialized steel. Even the various road constructions are being done. So now all you see the cement roads are being built, and they are using steels for binding and all that. And for all that, for joining purpose, you require electrodes. And huge road network is being built in India. So I think for every sector, the welding is very much a necessary item. And the way India is growing and the GDP, what government is planning, I think achieving that target, I don't really see a big challenge. Of course, we have to continuously improve our quality and as well as supply, which will help us, and for which we are getting up ourselves.
With regards to this statement, which has been given in the presentation about currently utilized capacity is about 48% and going up to 90%, whereby the capacity utilization is roughly, doubling, but you're planning a 3x revenue growth. So this will be led by kind of newer products, higher value products. If you can share some more details about that.
So it will be a mix of both, and we are actually, as I said, that though right now we are using 58 to 60% of our capacity, and we will be increasing our capacity by adding few more aligned equipments so that we can use those potential. Like for example, we have got extrusion machines, but we do not have a drawing machines which feed the extrusion machines. So all those are in lined up. So that we can at least use our 80 to 90% of capacity, which will help us to increase our revenue. And we have got enough demand right now. We are not able even to meet our demands. So I think that's one of it. And second, whenever it's required, we'll be investing into developing same production lines. Third, there's gonna huge. We are planning to get around more than 50 CR revenue from flux core wires every annum. We are starting for July, and then we will keep adding the lines of the same.
So as we had mentioned earlier, flux core wires is one of course, I would say relatively newer technologies in the welding consumable industry. Earlier, all the Indian manufacturers, as Mr. Umesh had pointed out, were importing because that technology was not very mature in India.
No, we were doing business of that
yes,
particular product of more
exactly.
than 25 to 30 CR
Yes.
per annum.
But it was more of an import, this thing.
Import driven.
But now, after BIS, a certification imposed by the government of India, that becomes necessary for the Indian manufacturer and the Indian players also to manufacture it in-house domestically and supply. That is also something that is going to drive. So it is going to be, of course, more, because more of the business, we are very, very heavily, very, very well entrenched in both the project-driven businesses, which are the B2B businesses, and also in the retail segment, which is very, very strong in the eastern and the central market, central India, which is, of course, the steel and the major infrastructure hub of the country.
Thank you. We take the next question from Keshav Garg. Please go ahead.
So, ma'am, wanted to understand that we did 11 crore EBITDA in fourth quarter. So, can we just annualize this number roughly on a per quarter basis and arrive at somewhere around 45 crore EBITDA for FY27, or there is some seasonality effect in Q4?
No, so of course we are looking at more or less those kind of numbers only. However, Q1, this business is a little seasonal in the sense that, of course, the monsoon season is where the infrastructure projects are not executed as well. But yes, we are looking at those kind of numbers.
Q1 is something very slow driven compared to all other quarters. As you know, the Q1 where there is extreme shortage of labor across all the sectors. So Q1 is something which dips, but Q2, Q3, Q4, there'll be,
Yes.
I don't think there will be any problem.
Yes. So 45 crores of an EBITDA, of course, is something that we are looking at for this year as well.
Understood, madam. And madam, also in the wedding consumable portfolio, do we have the full range that ISAB and Adore have, or there are some products that we are yet to add?
No, as far as welding consumables, I think we are fully equipped. Rather, our range and products are more extensive than them, and now we have got much more approvals also than them from our end customers.
However, the other product verticals, this also welding industry itself, if you talk about the welding solutions, it has welding consumables, it has welding equipments, it has the other ancillary and safety equipments as well.
And Adore is also into fabrication business.
Exactly, fabrication and
The
execution
flare
of
fabrication.
projects. So right now, if you talk about only the umbrella, the segment of welding consumables, the company has all the product ranges that both Adore and ESAB have, and in fact, slightly more, if I would say, very, to not being very this thing. But yes, right now we are not manufacturing welding equipments or the other ancillary safety equipments, or we are not into fabrication of and execution of projects, which Adore and ESAB are also doing.
So, madam, the pricing of our consumables, is it at par with the ISAB and Adore, or we are selling at some discount in the particularly the B2C market?
No, our prices are definitely lower than Adore and ASAP. See, both these companies are much older and they have got a much better brand image than us. And they are more into retail sector rather than project oriented. Project oriented business are much more into tender type where you are L1, you get the business. So right now, Adore and ASAP are enjoying retail pricing, which is higher than us. So in this particular segment, their pricing is better than us. But we believe because of our recent new marketing strategy and everything, soon we would be able to go nearby them.
And I
So,
think more so for ESAB, actually, I will say, because being an MNC, they of course do enjoy that kind of upper price band.
And ISAB is also enjoying those brands prices because they are supplying much, which I heard. I don't have exact figures. They are supplying to the concerned companies worldwide. So there they are getting a good margin.
So, sir, I'm trying to understand in the domestic market, if let's say Adore and Isab are selling at 100 rupees, then we are selling at what price? The same product.
The same product, it depends upon it. I think we can say we are 6-7% lower.
Okay,
So
understood.
around,
And
it's a very neck to neck competition actually in all these
But
projects
that is
and in
only
the
for
retail
I'm
market.
saying about retail segment. In project oriented, we are at par.
sir, understood. Now, sir,
Yes,
for the
sure.
welding equipment, yeah, last
Sure, may I
question.
request?
So,
Okay.
okay, sure.
We'll take the next question from Majid Ahmad. Please go ahead.
I'm audible, sir?
Yes.
Yes, Majid.
Yes.
Yes. Thank you, sir, for the opportunity. Good set of numbers. So I just want to understand for FY27, majorly, how are we looking in terms of the gross margins, considering some of the commodity price inflation happening? How are we looking to manage that?
See, whatever the inflation happening, of course, it does take time to pass on it over, but we are able to pass it over all our whatever increase in price to our end customers. It takes a month to transfer. So that's a lag which I think all industry has the similar lag, but we are able to do it. And as Payal told you that we will be having a double-digit margin this year.
Got it, sir. And sir, this year your employee cost, I think, has been a bit lower. Going forward, how do we see that employee cost and other expenses?
So of
Slightly
course,
moderate.
employee cost, which we believe is gonna increase little because we'll be focusing more and more into sales, employing good team, and both into operations as well as into sales.
So
So
currently, our employee cost, if you see industry across the peers, G Limited has the lowest employee cost, on a percentage basis vis-a-vis Adore and ESAP. But of course, we are also stabilizing, and I won't say stabilizing anymore, but we are also aggressively looking at growth, and that is where we are also ramping up our team. And going forward, I think there would be a slight increase in the numbers on a totality basis, on a wholesome basis, but I think in percentage terms it would still be relatively lower.
Got it. Ma'am, and secondly, wanted to know about your working capital cycle. I think it has slightly elongated this year. How are we looking to manage and improve cash flow generation?
We are looking at better cash flows also this year, because in the current year also the company had taken on this target to make the balance sheet more light and agile and lean, and that is what we did also in FY 25-26. The company disposed of a parcel of land in Q4 FY 26. And also, if you must have read, in the first quarter of FY 27, it is also disposed of part of the investment property. So a substantial chunk of cash flow has generated from there, and otherwise also, where of course the business doing well, generating profits also improves the cash flows. So we are looking at better working capital cycle and better management of the cash flows in the FY 27, and hence reduction of interest cost as well.
Thank you. We'll take the next question from Harshad T. Please go ahead.
Hello, am I audible?
Yes,
yes,
Harshad.
Yes. What is your R&D expense for the last 2 years?
the numbers.
Or as a
Actually,
percentage of sales, maybe if you could give.
we can, I don't know, we will let you, but we are investing, I think not as much, but then we
So
are
I think
investing into R&D,
expenses would
into
be,
equipments
yes,
for a,
expenses would be a bit difficult to say, this thing, because a lot of the heavy machinery which are actually they get capitalized and they're not expensed out. But we've imported, like, laboratory
for
equipments
example,
from USA.
we have
Uh,
imported XRF machine from Germany few months back, and because of which we are getting many more approvals, such as NPCL and other Adani and all that. Those are basically required to make sure that there is a consistency in the quality, and it's a major requirement of this customers, one of the major requirements. So, though our R&D expenses, I won't say is very high, it's in very moderate way, but one or two equipments which you will might see, it might happen this year or next year, but then those expenses are in much smaller amounts. It's not very heavy on the balance sheet.
Looking at the totality of the numbers, it does not come to a very large number, but all units of the company actually have a functional in-house laboratory where all these lab equipments are there, and each product, each unit that actually leaves the factory premises leaves with a test certificate. It is that critical and crucial, because the projects that it participates in, it's important, because the criticality, the longevity of the product depends upon the joint that is done by the welding consumable. So that joint becomes very, very critical in sustaining the project. So if it is a nuclear power plant and the temperatures are going up to 1000 degrees Celsius, that joint that is there is determined by the strength of the welding consumable. And that is why laboratory research and development, and of course there's a lot of tailor-made
Like
as a
recently, we have developed, I think, 2 weeks before we carry out the testing, and I think we'll be getting a small trial order also on the same of stainless steel electrode 308L, which gives an impact value at cryogenic temperature, which is at minus 196 degrees Celsius. So hardly two or three manufacturers are there in India. So this is more of a, I would say, trial, but testing charges and machining charges are not very high. It's more of a formulation and R&D and know-how. So that's it. The charges or expenses on R&D is not very high.
Okay, okay. Second is, what is your revenue split currently between domestic and exports?
So export currently, of course, doesn't even constitute 10% in the a few years back it did, but right now the majority of the revenue is coming, I think hardly out of 370, around 350 plus comes from domestic. However, the export numbers are something because we were very, very well placed in the Middle Eastern market, in the Southeast Asian markets, in Eastern Europe and USA, of course. USA was a very, very small, size that we were doing. The last 2 years have been turbulent, and of course, that market is not there currently
Recently,
with
I
us.
think for export purpose, we got an approval 4 or 5 months back of Abu Dhabi National Petroleum Corporation,
ADNOC.
Secondly, we got a now good breakthrough in Saudi Arabia market also. Third, we have also got approval, NUX approval from Russia. The already trial order has been supplied and it's under now testing. So all this will constitute to a major revenue
From the
from the
export
export
industry
business.
market as well. Domestic, of course, as we are all very, very, optimistic about the domestic consumption, that doesn't go where anywhere.
Thank you.
Fine.
We'll
Fine.
take thanks. We'll take the follow-up question from Ankit Gupta. Please go ahead.
Yeah, thanks for the opportunity again. So that if you can, ma'am, talk about what will be the breakup of our sales in retail sales and the B2B sales that will be doing directly to the likes of BHEL, like L&T, etc. And how would that compare to our peers like Ador and ESAB, and even Lincoln? So if you can talk about that. And secondly, on the same thing, when we are planning to grow our revenue in such a at a rate of around CAGR of around 25-30%. How is an organization, are we prepared to take this up, like in terms of marketing, in terms of manufacturing? So if you both the things, if you can talk about.
So
First of all, I would say if you will see ISAB, Lincoln, and all, they have all stopped giving sector-wise reports because it's become very difficult. Now you see most of our business, 70 to 80% of our business are to distributors. Only
Sure.
15 to 20% is to the end
So-
customers like BHL or L&T.
And
So it,
but even then, I'll just say, like even then in the distributor business, a lot of it goes directly to the customer also.
and those distributors, they supply both to retail as well as to B2B customers and to end customers as well. So to actually get the exact numbers or to get the approximate numbers
Of the competitors is difficult.
it's very difficult.
However, for us, I will say that we were B2B, I think around 20%, as Mr. Umesh is saying, 20 to 25%.
That is what we do, direct business.
Direct
But
business.
then our distributors also sell it to them.
Yeah, like a lot of times L&T, if it requires, it will keep stock with the major distributor in that area where the project is being executed, and we know that the material that we are supplying is actually going to L&T. So it directly does go to L&T channels also, and also we supply through them through the distributor as well. So around 25 to 30% here and around 65 to 70% there. But the 65 to 70% also gets converted to B2B. I won't be able to compare it, give you a comparison of how Adore and ESAB or Lincoln or any of these players do, because those numbers are never made available. However, this growth, because as I mentioned, the organized sector is also going to grow. We are also seeing a tilt in this number, also going up from 25 to 30% to 40% here. The second question that you had about how prepared, what is the organization's preparedness for the growth that we are seeing, and I will say that the last year's, the 2025's restructuring that happened, that in itself was a very, very bold and a decisive step taken forward in taking the company forward to the growth that we were looking at. So if we are looking at 1,000 crore growth, first and foremost, any organization, be it a small or a large scale or one of the MNCs, anything that is required first and foremost is the top management's focus, aligned focus, and a resonating focus amongst themselves. So that alignment is something that we achieved last year, and that aggressive growth focus and vision is something that we are moving forward to. As far as the organization's preparedness, the R&D team is very, very strong. The marketing team is where we are really building up our core strength. The ground, on the ground for workforce is something that we are building up. We have a very strong mid-tier and a second-tier and a third-tier team. We're also looking at expanding and entrenching ourselves in the domestic market across the country.
Thank you, Ankit. We'll take the follow-up question from Rahul Jain. Please go ahead. Rahul.
Yeah. Can you hear me?
Yes.
Yeah. The question is regarding to go from, say, the current level to 1,000 crores, say next 2 years, what kind of capex and what kind of team addition, what kind of further addition to the overall resources are we planning?
So regarding capex, of course, there are going to be a few ancillary machines, and apart from that, we are also shifting our, facility. A few of the machines that were there at the Thane plot of land, which we've already signed a development agreement for. So we are looking at shifting those to another facility where we've already identified. So around 20 to 30 crores of capex on ancillary and these flux code wire lines and everything. Apart from that, in the team itself, I would say that, of course, as I mentioned earlier to, I think, Mr. Ankit Gupta's question also, the top management team remains very, very heavily invested and, extremely agile on their foot in the decision making. However, the second, we are also looking at entrenching our workforce, so that the sales and marketing team, and there's a lot of work going at the back end on the technology, adoption, where the company actually goes, and adopts, integrates the newer technology into MIS reporting and other functional process work as well.
Sure. Yeah.
Thank you. Thank you, Rahul. We'll take the last question from Ankit Gupta. Please go ahead.
Yeah, thanks for the follow-up. On the proceeds of this Thane land, how do you plan to utilize it? Will that be distributed to the shareholders, and how should we look at it?
So yes, I think the shareholders will definitely be suitably rewarded, but the company is also not, our vision does not really stop at 1,000 really, Ankit. We are looking at not only making this company the country's biggest welding consumable country, the biggest welding solutions company, but we are also looking at making this company the world's biggest welding solutions company. So that is something that, of
No,
course.
I would say like more than giving a reward in terms of not only in terms of giving
Dividend.
dividends, but also giving a reward in terms of share values. So what we were thinking, actually, a dividend is one thing which we may think, or which we are planning. Secondly, what we are thinking of that money, how it will be utilized. It will be utilized to buy certain companies, as we discussed before also. Okay, for example, into various sectors where we are not there. For example, welding equipment, safety equipments, maintenance products, so that we can take this company of 1,000 crores through what we are planning through linear, and another 1,000 crore which we are planning through by acquiring such companies.
Exactly.
So this is what we are planning. So in next 5 to 6 years, we are planning that company should be 2,000 CR by acquiring such companies. We do know that acquiring such companies is also not very easy, but we are already in the process to speak of 1 or 2 companies, and we are getting a good feedback from them. So hopefully by this or next year, we will be able to acquire 1 or 2.
Thank you, sir. Sir, since that was the last question, would you like to give any closing comments?
Oh, I think thank you so much, everyone, for taking out this time and joining us here. The management of your company remains extremely committed, and I think we can have other, quarterly earnings calls and otherwise also, if any of you are interested.
Thank you to the management team, and thank you to all the participants for joining on this call. This brings us to the end of this conference call. Thank you.
Thanks a lot, everyone, and for your support. Thank you.
Thank you. Thank you.